Welcome traders. So it is Tuesday, the 2nd of April. Here we go. We're done with Q1 for 2024. My name is Adam Harris. I'm a chief market analyst and HN high net worth client trader and investor. So let's have a quick look at this week's economic calendar. So first of all, obviously holidays over. I hope that all of you have had some rest over this period, over the Easter weekend all around the world. At least it's similar to Christmas. It's one of those things that tends to be mostly global. So I hope you've had a bit of a rest and you're ready to get back into it this week. So just wanted to highlight the part that I was going to be paying the most attention to this week will be out of the UK, which was PMI, and that turned out better than anticipated. And so again, one of the things is I tend to ignore the forecast, because forecast to me is kind of like intellectual masturbation. It's not really something that actually necessarily contributes to things in an active way. I think I really want to prefer the actual results compared to previous results, because that gives us a better idea of what the trend is. And so the point is that number was really good. Now we've got tomorrow, so that'll be today. We've already had that news. We've got out of Europe. I want to keep a close eye on CPI, comparing it to this time last year. And then of course this week, don't forget, we've got non-farm payroll, which is the big kahuna, which is on Friday, which tends to just be very volatile period. So most traders just watch from the sidelines, but really pay attention to the unemployment rate. It's below 4%, which it's historically, I don't think it's the best unemployment figures consistently for some ridiculous period like 50 years in the US. So it's doing really, really well. But we want to be keeping an eye on that. Really, when it starts to go above 4%, that's when, kind of people start to pay attention to it. That doesn't mean it's a problem. It just means that's when it starts to get a little bit sort of closer scrutiny. And then we've got initial jobless claims as well, which is on Thursday. So now I'm sort of working backwards from Friday. So we'll be paying attention to those numbers as well. And then really services PMI data coming out of the UK. So those are the things I really want to be paying the most attention to, which is employment jobs numbers out of the US, as well as any data coming out of Europe, CPI data and PMI data from the UK. So there's actually a separate article where I've gone through what all these different things mean. And the thing is that these numbers aren't necessarily of interest to the market, except under certain conditions. So when the economy is really struggling, that's when you tend to look at jobs numbers. Are they improving? Are they getting worse? Unemployment and so on and so forth. When the economy is doing really, really well, the focus tends to be more on the interest rates. Are the central banks are they going to raise rates, because that will then impact the returns of the markets. So really the market tends to be more sensitive to certain figures at certain times in the economic cycles. There we go. So let's move on and have a look at the charts, and I'll try and keep this particular episode under 30 minutes. I do try to do that. I'll try and do that again today. Okay, so having a look at the VIX. The VIX itself, again, is still stuck within this low range. I'm, again, not worried about any of that until it starts to spike. It's very kind of sleepy, but there's no alarm bells or any red flags at this time. Like I said, the biggest issue out of the US really is debt. That's one of the things that is impacting, and of course, with the high interest rates. Bond yields are very, very high, but also, debt is really, really where the focus is, and that is something that has to be dealt with. So let's have a look at the dollar index here. So the dollar index is performing incredibly well at the moment. The US dollar is heading towards 105, looks relatively bullish, looks really nice and healthy. So if you look at the candles here on the weekly, compared to the last time that price was here, the difference is that this time price actually appears to be more confident in where it's going, and therefore is much more likely to head up to the next level of resistance, which I have here at about 105.15, which means that that'll be the target for this week. The question really is that when it gets there, what will happen? And almost certainly it'll time itself so that it gets there by the time we get to NFP or potentially ADP numbers on Thursday. And then we'll see what happens if there's a reaction against that level. So it's going to be very interesting to see where the week ultimately closes. So what does this mean? It means that we're going to see euro dollar head lower. So euro dollar will come to pressure. It's testing a level of support at the moment, but it is definitely going to be under pressure to head lower. And you can see here when you look at the weekly that we have formed a head and shoulders pattern. Head and shoulders patterns, just so you know, have about an 83, specifically like an 83.04% chance of success, meaning that if we break this, there's an 83% chance we'll see price head down towards that 104 level, 104.50 level. Okay, so, but we have to really get to that point. We're not there just yet. Also looking at cable. Cable is coming down to its levels of support, starting to shift below that. So the implication so far, ladies and gentlemen, is that the dollar is winning this battle that we've been in for a while. It looks as though it's going to win. We've also got Aussie dollar here against the US dollar, also sitting at a level of support. And actually, if you look at it here, On the monthly, this gives you quite a good story here. You can see the price went up, was rejected, and attempted to go up last month, was rejected. And so there's a lot of pressure. That dollar is very strong at the moment. It's not unreasonable within the current range to expect that dollar to win the battle and to see it strengthen. And again, here we can see we've got that downtrend on Kiwi dollar. So Kiwi dollar, I expect to continue to head lower. And so that also maintains. So you can see now that all of them are generally giving us the same picture. They're all showing weakness against the US dollar. Look at the beautiful dollar Swissy. So dollar Swissy having pulled back. Dollar Swissy is very bullish at the moment, and the Swissy pairs are particularly bullish. The Swissy pairs are on my watch list. They could be providing us with some of the strongest trends for Q2. Okay, dollar CAD, very, very messy, coming up towards resistance there. It's not really being boosted by that stronger dollar at the moment, so it appears that it's also kind of just treading water. Look here at dollar yen. So dollar yen testing resistance here again, that 150 level. Really, excuse me, where a lot of pressure is from a technical perspective. So for those of you who are fundamental analysts watching this now, the technicals are hinting at this pushing up. In other words, that this current trend with dollar yen is going to break higher, even though the BOJ, the Bank of Japan, are not really ideally not wanting that outcome. But it does look as though that's very much going to be the case. Let's do a very quick run through the yen crosses. I'm actually going to do a separate analysis of the yen crosses. Actually, I'll just leave it. I'll do a separate analysis of that, and we'll come back to it. Let's move on to gold. Gold continuing to push higher. So there was a little bit of divergence there, but the price action looked really nice and healthy. And so it's continuing to push higher here. At some point, we need to have a bit of a pullback and a retest. It's a little bit overextended on the monthly, but it's looking really, really good. Nice and healthy. Everything about it looking good. And in fact, I can get rid of this now because the divergence has gone. Why do I say that? We've got fresh highs and we've got fresh highs on the MACD. So that divergence has gone. What it did was it consolidated and got rid of that effectively, I guess you could say, overbought. Now we had a pullback on silver. Silver still has some really good potential to move to the upside. We don't need this anymore. We didn't get that pullback. Again, we had just a shallower pullback and we've continued to push high. So for me, again, silver has a lot more room to the upside. It's got a little bit of resistance that it has to battle with right now, but I think that's got some good potential to head much higher. Let's do a very quick look at coffee. Just want to see how that is performing at the moment. So nothing magical about coffee, still looking nice and bullish. Let's move on to natural gas. Excuse me. So natural gas definitely trying to turn around now, starting to push more and more bullishly. There's some bullish divergence coming in. I've been talking about natural gas for absolute ages, trying to see, but it really is trying to turn around here. But I'm just going to leave it where it is until it really starts to break above these highs, but it is putting the brakes on. It's kind of bottoming out there. Let's look at crude oil. So crude oil is looking very nice and bullish. We had that nice pullback. We're now starting to head into overextended territory, but it is looking good. Overall here, there's nothing really stopping it. I can't see from heading up towards 88.40, at least up to these old highs here. So it's it should continue to head a little bit higher. Any kind of pullbacks for me would be buying opportunities on that. And that will be the same for West Texas. So US crude oil, also very nice. This was actually a relatively straightforward pullback into the moving averages, previous highs as well. So that was pretty straightforward. And that also has room up to 89.40. So we've got some good US crude oil can head up towards 89 or 89.50 relatively soon. So that looks good. Right, moving on to the global indices. So again, we've got a bit of a double top that's happened here. Okay, now there's a rejection and another rejection at the same height. I did mark this as a bit of a danger zone. I just picked it near the round number, so there's no real magic science behind it, just that I'm going to start looking at the big round numbers to see if we do start to get a bit of a correction. And this week it does appear to be kind of topping out there a little bit. The monthly as well is starting to introduce its very first red candle. I mean, we're 2 days into April, so it's way too soon to reach any conclusion. But again, here, any kind of a pullback down towards 38.3 would be very good for the market to do that. The S&P also double topping there a little bit, showing some signs of exhaustion. This is the last time it kind of did it over here and a little bit over there. But prior to that, kind of back here towards January this year, you can see moving up, then bumped its head a little bit here, consolidated, then kicked off, then had a bit of a consolidation in this area, then kicked off, and it's consolidating again. So it is definitely starting to stumble. That's okay. I'm just looking for that weekly retracement. We know it's on the horizon and it will unfold when it can unfold. I marked this area, the 19,000 level here, and it's still this area here, but it looks as though we're struggling right where we are now. So again, what I'm going to do here is I'm not going to kind of count my chickens before they hatch. We could consolidate and then break out and then have a rejection and head low. One of the things I want you to notice here is that the red 50-period moving average is coming closer and closer and closer towards price. So in other words, the gap along here between price and the red 50-period moving average is getting smaller and smaller and smaller. And so this is potentially where we're going to see price start to break below that and start to have a bit of a correction. We could see that happen. Sell in May and go away. That could be kind of what we're heading towards. So we'll see. Then Russell 2000 also managing to break out. Listen, the best part about it here is back at these all-time highs. I'm going to just mark that level. Just kind of put it where we are there. That looks really good. And it closed right near that level, but we're going to see if we can continue from that. And so there's a nice bit of a lagger, but it's performing really well. This is the FTSE, I beg your pardon. Mini Russell is here. So Mini Russell's managed to break out Russell 2000 out of its box, slowly but surely creeping higher. That's also a good sign, nice and bullish. We're on the FTSE now, back on the FTSE. FTSE continues to perform incredibly well. I'm very happy with it. And again, for those of you who are saying, well, it doesn't really matter about any other indices because they all just follow the US. One of the things that has been different in the DAX, the German DAX, and obviously in the Euro 50, as well as the UK, is that they have not actually completely correlated themselves with the US markets. When the US markets were going through major corrections, these markets went through much smaller corrections, which I think speaks to their versatility. They are underpriced, I believe, relative to US stocks, and they're performing quite well. So yes, they are correlated, but their behavior seems to be slightly more independent than I have seen in the last 15, 20 years. And I take that as a good thing. Independent behavior is really a very good, healthy sign. The DAX, I marked this area, look, it just burned right through that, and it's continuing to go higher, but at some point it is going to have a correction. And it would be interesting to me if it ultimately does come back to the 18,000 level. So I'm just going to kind of, for fun, I'm just going to kind of mark this area, but just expand it out, and we'll see how the market responds to that. But just continuing, it's on fire, it's doing really, really well. EVs, for example, it's quite interesting to me that obviously China, build your dreams, as well as European car companies that are starting to introduce hybrid models. So this, by the way, I'm just going to comment on electric cars at the moment. This is a very subjective opinion, so I'm not just kind of, if anyone's interested, I do think hybrid cars are probably going to occupy the main space for the next, I think that us getting to full electric is going to take longer than anticipated. But I think hybrid cars are really going to become incredibly popular over the next 5 years. I think that market is going to swell. I think fully electric is going to be for the people who can afford it until the prices really start to come down. But definitely there's an opportunity there for electric cars below, if you're in the UK, below £30,000. Above £30,000, it's not actually sitting within everybody. Most people can potentially afford somewhere between, let's say, £12,000 and £20,000. Above 20,000, cars are quite expensive in the UK, and regulation, licensing, and everything is quite expensive. So that, and the infrastructure is not all there yet. So I just think that's something that is that market there. Hybrid is going to be the one that most people move to because it's more cost effective. If you could go fully electric and the infrastructure was there, people would go electric immediately. And one of the things I was just reminded of the other day, and I don't know if any of you recall this, but when we had lockdown, the first global lockdown, the weather was glorious, and it was glorious all around the world. When I was in Bali, people were talking about how good it was in Bali. It was amazing in South Africa. It was amazing in the UK. It was amazing in Canada. And so obviously at that time, most of the planes were grounded. People weren't driving. And it was amazing how quickly the climate responded to that. So there's other benefits to us, obviously, going fully electric when we can. Okay, so ASX out of Australia also performing relatively well. I mentioned, no, there's nothing here. There's no divergence. It seems very healthy. It's very, very nice and bullish. This is great. And again, I emphasize, I still think we're in the early days of what's going to turn out to potentially be one of the greatest kind of bull market runs that we've had since the 2000s. So some really, really good opportunities for sensible approaches to kind of the markets here. We all do appear to be topping out here. This is the Nikkei. Nikkei's had a really good run. Look here, we had a pullback, we had another move up, and we're immediately entering another pullback. So we do kind of we are starting to slow down a little bit here. We could go through a little bit of a consolidation and a breakout. Just observing that. Okay, moving on to the MVPs. Apple here, I spoke about this area. Believe it or not, Apple still has not really made up its mind. It was whether it was going to hold here, continue up higher, or whether it was going to break and go a little bit lower down on that monthly. It could still be range bound. So Apple not having shown much change yet. So let's just see how that goes. Amazon, a lot more activity. So just look how it's just stayed in this area and it hasn't really moved as much versus kind of the previous 20 candles. For example, and you can see it's sort of consolidating in a way. I think it is consolidating. Look at it here on the weekly. It's just sort of going largely sideways with very small closes, inching a little bit high. It is at all-time highs. It's a little bit overextended here. So all of these are due for a little bit of a correction, but it looks okay. You know, I'm like, it's gonna keep going. Slowly but surely. Then we've got AT&T, which is also looking good, keeps continuing to click higher. We've got ARC. ARC is still stuck within this range, hasn't quite broken out, so no change there. Still at the top, hovering there. We've got ASML. So remember, what do ASML do? They produce the machines that other companies use to create their semiconductors. So in the same way that Autodesk produces the software that all the movie studios use to produce all their visual effects, these guys produce the machines that NVIDIA and other companies use to create their create their circuit boards and their semiconductors. So Glencore recovering really nice, back within the range. That's all I can say here, back within the range. But you could argue that these lower highs and lower lows make this a bull flag on a much higher time frame, which means that we could see it break out and start to head higher. Tesco, really nice, strong month there off support. We spoke about that. So it had a really nice recovery and looks like it's going to continue high. Looks fine. Amex, just on fire right now. So just remember that these companies tend to earn really good cash because they get a percentage of every time you kind of tap a card. Amex with their travel cards, with their British Airways travel cards, for example. I'm not sure if you get an American version of that, but in the UK, for example, it's very, very popular. So people are doing a lot of transactions on these cards. So they get a lot of cash. I mean, it's not just their normal business, but they get a bucket load of cash because people buy their airplane tickets and travel tickets on it. We're in the danger zones here for Berkshire Hathaway, which I spoke about. All I mean by that is this area is where it seems to be slowing down. It's coming back up into that area. So actually we'll see now if it's going to double top or not. Otherwise, it looks fine. It actually looks like it's going to keep going. Coca-Cola ticking its way up, still within this range. So the momentum, believe it or not, when it's range bound is actually in its favor to go to the top of the range. BP continues to push higher. Immediately, we know that crude oil is doing well, which means we know that BP and Exxon are going to be doing fine. Okay, so it's not science here. You can see it up at the top of the range, consolidating. It's probably, I think, oil is looking like it's going to keep going higher. Therefore, my technical prediction here is it's much more likely that Exxon's going to break out and keep going higher. And because it's had a consolidation, it's probably going to move when it does. General Motors looking good, ticking up higher. It's outside of its range now, so that is good for General Motors. None of this should be a surprise that a lot of these are going higher. Look at the quality of these trades. JP Morgan Chase, like I said, bull market, crazy stuff, man. But very quickly, there is Jim Thanos here, the Thanos hedge fund. He spoke about this being the golden era of fraud. And I want to look more into that. I think that's worth talking about. I might write an article about that. But that is something you want to think about. One of the one of the things that happens in bull markets is you get an increase in fraud. And so regulation drops. This is how the Big Short, if you've seen the Big Short, this is why you got the ratings agencies in themselves were kind of, and you had the CBDs, you had collateral debt obligations, all kinds of, CDOs, had all these different things that contributed to the problem because they weren't being rated properly. And they were being, people didn't think there was a problem until there really was a problem. So that is the kind of thing that can occur in here. And a prime example of that, ladies and gentlemen, would be, for example, DJT, which is Truth Social. Truth Social is valued at some ridiculous multi-billion-dollar number when they actually made 4 million in revenue, and they lost 48 million. They ran a loss of 48 million in the last year. They don't make any money. It's vaporware. Their software is not unique. It's open source software. There's nothing of value in this company, and it got listed and valued at a higher rating. And there's definitely some fraud that went on in that, just because that shouldn't happen. That company should not have been valued that high. It should not even have been listed at that point. And it's certainly a pump and dump. It's absolutely a fraudulent scheme. What is wrong with me? And so there's definitely, that's the kind of thing that's going to happen a lot more. So again, for me, it's always going to be about focusing on the traditional, longer standing blue chips, for example, because they've been around for a while and they tend to produce a product that you bake and use. So just something to be very, very cautious of these types of things. We're likely going to see more of them, not less of them, but we do need regulation to step up and do that. Okay, Invesco QQQ. looking pretty decent here, nice and healthy, but you can see it is topping out. So I'm just going to mark this level here. Most likely it's going to consolidate before it moves higher. You could just see that pressure starting to build up. We'll likely see it start to, but it is, and it is, again, is overextended. Any kind of pullbacks to me here would be fantastic investment opportunities as opposed to trading opportunities. We've got a double top here on Adidas. Did break through, retest, and then bumped its head up again. But overall, I think it's looking relatively healthy. You can see it probably is just bumping its head against that 50-period moving average. Excuse me. So eventually that's going to push a little bit higher. Meta in this area here where I just spoke about bearish divergence. A bit of a correction down to these levels would be good, 450, 400. See that little bit of exhaustion showing up at 500, nice round number. Any kind of a pullback here or a consolidation would make sense. Meta's had a really solid run, and so we'll see. Morgan Stanley continuing to push higher. That weekly looks really nice and healthy. I've marked these levels. They're red because they're weekly, not because they're anything dangerous. So that's a problem with marking things that way. Nvidia starting to top out a little bit here. So again, I pull that back to 800 or even further to 600 would be amazing. Looks as though it's a little bit exhausted here. Okay, so just below that 1,000 mark, a little bit shy of that. Double topping as well, bearish divergence. The implication is we'll see a bit of a correction. The question really is how bad will it be, or how big? 800 or more? We'll have to see if that's going to be the case. Netflix also slowing down. Look at that angular momentum. Very bullish here, less bullish here, even less bullish here. Also topping out a little bit there. PayPal trying to get above. It is slowly but surely managing to crawl above the 50-period moving average on the weekly. That's a good sign. Starting to look more and more bullish. Could PayPal turn out to be a massive winner? It's possible. I wouldn't go all in on that. I think that that's too, it's an unknown, so I wouldn't do that. But it could turn out to be it almost looks as though it's doing an inverted head and shoulders here. Look at the MACD just creeping over from negative into positive territory. So PayPal could turn out to be a banger, okay? Could turn out to be a 10-bagger, as Peter Lynch would say. All right, Spotify. Spotify looking good overall. We had a nice little buying opportunity there. It's battling a little bit over here, but it could be up for a bit of a consolidation. It's also had a really good run. Spotify doing very well. Spider pulling back. Oh, I spoke about this. We had a pullback and a bit of a bullish candle here. So it's in the right area for it to kind of turn around. For me, I would prefer to see another bullish candle. We'll see if that's going to be the case. FedEx doing a little bit of a pullback over here, but FedEx again having had a really nice breakout over here. I think it will probably hold and continue higher. Not sure if that'll be this week, but that is looking good. And then you can see here Tesla coming back up, battling a little bit with resistance at the moment. There's lots of buyers propping it up here. So there's people propping it up here. You can see it's the price action is dropping. The candles are going lower, but the wicks underneath imply buyers are kind of buying at this point. So that's going to happen on its way down. It's going to have people buying it because it's getting cheaper and cheaper as it goes. But the momentum is still to the downside here. You can see price again has dropped below this 50-period moving average, which it hasn't been. Okay, so it was there in August 22. Yeah, it's look, in order for this to turn around, we really would have to see it break back up above that 205 level. And we're just going to have to see how that goes. Alternatively, if it starts to get weak, if it has another heavy sell-off, what's going to happen is the people that were potentially looking at buying it might start to reduce their exposure, or other people who bought to the highs might start to get out. We'll see, and it will accelerate as it goes down towards that 105 level. It is kind of where it could potentially start to head down towards, if that's going to be the case. We'll see. Okay, Vanguard, again, very similar. This one very similar to QQQ, very similar to a few of these others, is performing incredibly well. Likely that's where, remember, they've probably got a lot of exposure in the S&P 500 as well. So the S&P, that's something we have to kind of pay attention to, is how many of these have got the same pieces in the same pie, and therefore the danger lies in the S&P. All right, that's kind of where the danger lies, because if anything happens there, it impacts all of these. Walt Disney continuing to climb. I think Walt Disney is going to turn out to potentially be one of these like 10 baggers. And that was a relatively decent opportunity there. It's the most obvious kind of setup being here on about the weekly, which looked particularly good. All right, let's have a quick look at bonds. 10-year T-notes still heavy selling over here. Hasn't broken through that downward sloping trend line. Is still looking bearish over here. So, okay, downward pressure. Eurobond, which I said is more bullish, is trying to turn around, is still battling over here. So the bonds not getting much love there. Let's move on to cryptos. Cryptos bumping their heads again in this area, so they've had a really good run, so it's not unique. You've seen some of the indices have had a really good run and are now bumping their heads over here. We can see we're getting that stronger dollar the last week. So that stronger dollar is most likely giving them some headwind that they're battling against, but a lot of them have had a really good run and they do need a temporary correction. So in terms of timeline, it could be a correction that lasts anywhere from 4 to 12 weeks. That's the kind of thing I'd be looking at. Some of them might consolidate and then head higher. Some might actually have a deeper correction. In both cases, I still think a deeper correction is always a better way because you get a nice discounted price. Look at this one. Ethereum, for example, should have set up as a bullish to go and in fact is still correcting. So that's still letting off some of this the buyer's sort of heat, and it will probably head down towards 3,000. So we're looking like there's still selling pressure on these. Solana, which is also double topping here as well. So again, you can see it battling there. All these are, it's not unique that we're seeing similar behavior here as we've seen in some of the indices. It makes sense. It's a similar, same kind of money behind it sort of thing. No conspiracy stuff at all, just that the bigger money as well is potentially positioning themselves. They would have seen a boom in tech, a boom in AI, and also, you know, portfolios get a bit top heavy and we've had a really good run. So we get profit taking. That's all. And in this area as well, starting to show some exhaustion and it's coming up to all-time highs. So the point is the overall conditions are nice and bullish. If we have to sum up everything here, the overall conditions are still nice and bullish, but it looks as though some of these markets are getting ready to have a bit of a consolidation or to take a little bit of a breather. And it could align itself with the sell in May, go away. If you've not heard that expression, it's worthwhile looking up. Just meaning that you do get periods of the year where you tend to get bull runs. For example, the Christmas Santa Claus rally at the end of the year, you tend to have a really good, and this is something that Warren Buffett always says, this is often his most profitable period will be the run to April, the first part of the year up to April. Then you might get sell in May, go away, and then you get a boom run at the end of the year. And of course, September could turn out to be a terrible month. And again, if it does, it could turn out to be a buying opportunity for investors. We'll see how that goes. That's it from me, ladies and gents. Have a fantastic week, first week of April, and we've got jobs numbers, so it's going to make the market a little bit more volatile, but it's also going to be interesting because it'll set the game for the coming week, and we'll see how that goes. All right, guys, take care. Thank you.